Good evening, everyone. On behalf of the Committee for Members in Practice of I extend a very warm welcome to all the distinguished participants joining us from across the country. There are almost 800 plus participants as of now who have joined live with us in this initiative, Grow Your Practice. This initiative embodies our continued commitment to empowering our members in practice, helping them identify new avenues, leveraging emerging domains, and strengthen the foundation of a sustainable and future ready practice. Today's episode is a special one: Opportunities for Chartered Accountants in IFSC Gift City Overview and Registration Process. Marks the beginning of a focus episodes designed to help practitioners explore India's fast evolving international financial ecosystem. The IFSC in Gift City is rapidly emerging as a global gateway for financial and professional services, opening vast opportunities for chartered accountants to expand their professional footprints beyond traditional practices. So, through this session, we aim to equip you with a clear understanding of the operational framework, registration process, and emerging practice opportunities within IFSC. We try to curate more episodes so that there is continuum, and you can follow the entire episode to develop the further understanding. I am delighted to share that we have with us CA Madhukar Hirgange, the chairman for Committee for Members in Practice, and our speakers of today's session, who have deep domain expertise, CA Amit Kedia ji and CA Jay Shah, who will be guiding us through today's deliberations. Sir, we thank you, all three of you, for joining us today. So before I invite our speakers, once again, I thank each one of you for joining this session and your continual engagement with ICI's initiatives. Please do not forget to give your valuable feedback to us. The link will shortly be appear on the platform. And there is also a very interesting publication which has been co-authored by CA Amit Kedia ji, CA Jay Shah ji, and there is another author, CA Yash Shah. So this publication will also be seen on the platform and you can download the same. So let me take up now with a formal introduction of our chairman, CA Madhukar Narayan Hirkange. With an illustrious career spanning over 37 years and a prolific thought leader, he has also co-authored 37 books, including 12 on GST, translating a complex tax legislation into a practical guidance for thousands of professionals. Beyond technical expertise, CA Hirkange's life's work has been to inspire, mentor, and nurture professionals. For over 2 decades, he has devoted himself in shaping the next generation of chartered accountants who lead not only with skills but with purpose and compassion. A three-term Central Council member, his leadership is defined by a transformative vision to evolve CA profession into one that is future-ready, value-driven, and socially responsive. And under his guidance, the committee has taken various initiatives: Grow Your Practice, Bridging the Mindset Gap, which is another webinar series that coincidentally we do in the same slots, 4 to 6 p.m. on every Monday. So without wasting much of our time, may I request CM Madhukar sir to please guide us with his opening remarks and also about the expectation from this particular session. Over to you, sir.
Thanks, Alok. We have been looking, like Alok said, I'm not going to repeat what is my vision. He has more or less encapsulated that very well. Very important, what we are going to do. What we say we are going to do is different from what we do. So, what is it that we have done, if you see, we have one by one started looking at what are the major opportunities in our practice. First, we have taken up enhanced program for Practice Ki Pathshala. Basically, that particular program is a old program, enhanced. We enhanced it, and the office even wrote a background material for it with some inputs from me. What it does, it gives us strategic insights into practice. It gets us what are the modern automation tools which are available, including AI, Power BI, etc. Also, the practical skills which are necessary. It also touches on mindset changes, which we are got a webinar series going. Focuses on ethical growth and very, very important, how to attract clients. Whether there is any software which I can apply. Institute has a software called PMS, Practice Management Software, which is allowed, which is free. So if you look at it, we have a deep commitment. This committee has a commitment to serve all of you. While we are looking at the commitment to serve you, we are also trying to see that you see the value of ethical practice, you see how you can improve your quality. We want to motivate you, as Alok was saying. Start small, think big, act ethically, serve before looking at returns. Very, very important. Many of us, when we start practice, we expect people to come and fall all over us. Nobody will come. You start your service activity now, and you can be sure the returns are all waiting to come. While we are looking at so many objectives, we are also looking at attitudes. What are the good attitudes one has to build, especially when we look at overseas or global consultancy? This committee has already done around 8 projects or 9 projects now, and you will be seeing many of them unrolling. You should contact your branch. If you know any branch committee members in your place, ask them. CMP, I hear, is bought out many opportunities. One of those opportunities now we bring you with Amit and Jai. And they are co-authors. They are not ordinary guys. So let's hear from them how we can make use of this tremendous advantage. And I want both of you to tell me, I don't want to come out of Bangalore. Can I also practice in Gift City? I don't want to come to Ahmedabad. Bangalore, very comfortable weather. I want to give service from here. Can I do that? Please cover that also. Thank you very much, Alok. And I am also a learner. Till I am able to stick around, I will be here. I have another call at 4:30. Let's see.
Thank you. Thank you so much, sir, for your words of wisdom. May I now introduce you to our first speaker of the day, Sri Amit Kumar Kedia, a distinguished chartered accountant with over 17 years of rich experience and diverse experience in finance, compliance, and strategic advisory. A multifaceted professional, he has established a formidable reputation for delivering cutting-edge financial and regulatory solutions to client over across industries. His core areas of expertise includes RERA, SEBI regulations, IFSCA, Gift City, legal and dispute resolution, investment structures like alternative investment finance, investment funds, REITs, SMREITs, capital markets, SME IPOs, social stock exchange, forensic audit, due diligence, international finance, and labor law compliance. Renowned for his strategic acumen in fundraising and capital structuring, Mr. Kedia has successfully advised numerous corporations and startups in optimizing their financial ecosystem and navigating complex regulatory framework. Thank you for joining us in this episode today. I heartily welcome you. Now over to you, Amit sir. Please start with your session so that we all of us can enjoy and can start our learning right away. Over to you, sir.
Thank you very much, Alokji, Secretary of the Committee for Members in Practice. I thank Chairman Sir and Vice Chairman Sir for giving me this opportunity for today's very important webinar on the opportunities of IFSCA Gift City. Before starting, friends, I would love to answer respected Chairman Sir's questions which he have asked to both of us. So, definitely, sir, uh, keeping Bangalore as your head office and making Gift City as your branch office, very well, anybody across the country, rather, I would going to say across the world, can start their practice at IFSC, which is having its head office at Gift City, Ahmedabad. In addition, sir, the council have in Pahalgam have decided that now the dual degree can also be taken in terms of the practice. That's for say, if I am having my partnership at any part of India and have I'm same partner in IFSCA, then both would be recognized by our institute. And sir, I'm very thankful, and all the fraternity is very thankful to the council and to you for coming up with this amendment in the council meeting at Pahalgam. Sir, with your permission, I start telling about what the opportunities we as professionals, we as chartered accountants are having worldwide. Whichever country we see which have been developed is having its IFSC, that is an international financial center of its own. Maybe Tokyo, maybe US, maybe London, Dubai, Singapore, any of the jurisdiction which is having a developed nation category is having an IFSC. And we, when seeing 2047 being a developed nation, the opportunity increases many folds. Certainly, the concept for our nation is now almost running at a 10 years of its age, but it is still very new, very recent, which we would be understanding. If we talk about the geography where exactly the IFSCA is, then it is near to Gandhinagar, which is the state capital of Gujarat, and it is near to 20 kilometers from Ahmedabad airport. So we can say it is somewhere between Ahmedabad and Gandhinagar. Now, one major and very important aspect which everybody forgets or there is a misconception about the IFSC is that if any exports needs to be done or any trading or manufacturing is to be done, it would be treated like a SCZ, similar to the SCZ which are there in another part of the country. But no, certainly no, this is not like the case of the financial products, the financial services financial institutions, these organizations or these financial products are having the jurisdiction at this IFSC. So just for the convenience, I just repeat once. This special economic zone is not for any exports of goods or trading of goods or manufacturing of goods. It is purely the financial products for which this special economic zone is for. If we talk about the area, then in totality, it is around 886 acres of land where this city is being developed, of which it has been distributed. It's in two parts. One is the domestic tariff area, which is around 625 odd acres, and around 261 acres of land is the special economic zone. So, whenever now we would be talking in regards of IFSC moving forward or the SCZ, then we would be talking and understanding about this 261 acres of land. Herein, this area is being divided into majorly three parts. One is the commercial space, the residential space, and the social space, that is the social infrastructure which is being handled, which is being there in that place. So on this slide, we all can easily locate the exact place around where this gift city area do have. If we talk about the infrastructure of this place, then there are residential areas, there are international schools, international institutions, international colleges, education institutes, foreign universities, world class hospitals, medical facilities like Lilavati. In education, two of the Australian universities are already there. One of the UK university is there. Good big indoor outdoor sport facilities, five-star hotels, multi cuisine restaurants, business clubs. The infrastructure is so smart and so modern that the water treatment is all being done in house. There is a zero discharge for this city, and all the waste is being circulated through the utility tunnels, and whole of the city is having a double backup. Along with all the city is centralized air conditioned. So you can just think about Singapore, Dubai, and 10 years, 5 years down the line, this 800 acres would look like to be that. Friends, here I am not pitching or telling the opportunities in respect of the real estate. Here, I just want to communicate the manner SEBI is having its head office at Mumbai. Similarly, the IFSC is having its head office at Gift City. And you can imagine when any of these financial institutions are there, then it is inbound that the city would also be the infrastructure also needs to be of an international standard. Moving forward, now if we understand the specifically the what IFSCA is, then IFSCA is an act which have been passed by the parliament of our country way back in 2019. The authority got established in April 20. As we all know, that was in COVID period. So the work was going, but was not at such a great speed or pace, we may say. Now, what is the difference between this IFSC and the other regulations which are there? So, IFSCA is a unified regulator. In the terminology which we understand, that is, if we take SEBI, RBI, insurance, pension in India, together, these four regulators and some other of them combined together constitutes to be IFSC. And the authority which governs is the International Financial Service Authority. So now, in this jurisdiction of this special economic zone, which we have talked, if any decision or any regulations or any notifications in to be taken, then that needs to be taken and dealt with this IFSCA authority. So might be a banking decision, insurance decision, pension, or capital market related. Any of these regulations would be for this specific special economic zone would be conducted by IFSCA. Just to understand, the jurisdiction is absolutely not an Indian jurisdiction. That needs to be absolutely very clear to us. The land belongs to India, definitely yes, but it would not be counted as a Indian jurisdiction. This is absolutely a foreign jurisdiction. Or you can say, as equivalent, we are having ourselves outside the country, maybe at US, UK, London, any part. Similarly, the jurisdiction would be dealt with. Any inbound, outbound, to or for from gift would be dealt by FEMA, and the limitations would be taken care and would be seen before any transaction at IFSC. This thing I think is very much clear. In case there is a doubt in that respect, please get it clarified by me again. You please can put your questions and can get this thing very clear from it, because that is the core base of IFSC, that it is not a carrying a Indian jurisdiction. This is a foreign jurisdiction. It's, you can say, it's a place which is within India, but it is not a part of, in terms of jurisdiction, India. Now moving forward, where are the professional opportunities? So the professional opportunities are equivalent to whole of the world, whole of the India, which is there at a single point. So effectively, if we see what are the opportunities in the jurisdiction of Singapore, Dubai, these are the opportunities there where lies at Gift City, at with the authority IFSC. Singapore, Dubai are far more bigger than the Gift City. And as we compare with the area, it is the IFSC is far more smaller, but the opportunity lies similarly. So if any of our professional brothers and sisters are practicing in specifically RBI regulations or SEBI or insurance pension, you can just imagine combined together all these regulations one can practice in IFSC. In addition, it is just not the compliance part for the entity which are there at IFSC. Indian entities can move to IFSC and do their foreign business. Foreign entities can create IFSC as their base for doing their global business. So you can understand that how big the opportunity that anybody from the world, including India, can keep this as their jurisdiction to do business worldwide. Moving forward, if we talk about what are the activities, as Alokji very well told, we would be discussing these activities in these series of webinar. But just to take a broader aspect, we would be just going through and understanding, detailing, we would be understanding in our forthcoming series. So banking and financials are one of the activity which are there. Insurance is again one of the activity. Capital market. Capital market, again, it's a very vast opportunity where fund management is there, AIFs, REITs, InvITs, the intermediaries. So any intermediaries worldwide can come open their shop at IFSC. Bullion market, fintech, any of the fintechs across the world, startup world across the world can put their shops at IFSCA, can get themselves registered in the sandbox and then can go live. Many of the startups from US are now looking forward to get themselves registered at IFSCA. Global in-house centers, entities in India have gone worldwide. They can now create their head office where they can manage their treasury with these global in-house centers keeping that at gift IFSC. Aircraft leasing, ship leasing, ancillary services, which includes the bookkeeping, accounting, chartered accountancy service, legal service. These all would be covered under ancillary services. Direct listings. Any of the entity from the world can come and get themselves now listed at IFSCA. Similarly, as you might have seen long years before when ADRs and GDRs used to be issued, companies from India used to go to US, to markets in Europe, London, and used to dilute their equity and raise fund from there. Similarly, entities across the world can use this jurisdiction by just diluting 10% of their equity and getting themselves listed over there. Intermediaries like brokers, clearing members, depository participants, investment bankers, portfolio managers, investment advisors, credit rating agencies, debenture trustee, custodians, these all can come and open their shops at IFSCA. So it is not I am talking about India. Tomorrow, a brokering firm from Japan wants to come and set up their brokering house at IFSC and do a global business, they can come and open. How the professional opportunities are being created, getting them structured, guiding them for their registration, post registration, helping them for their accounting, helping them with uh, their audits. These could be the professional opportunities. Moreover, key managerial persons would be required for these entities to be dealt with, and we professionals can again give a support for the key managerial persons for these entities. So why this gift? I can do my business from India. I can do my business from the jurisdiction where I am currently sitting, where like I am having my office, and from there I can grow internationally. Why? Why I should come to IFSC? Why I move all my operations to IFSC or start my branch to IFSC? This is the biggest driver. That is 100% tax holiday. Yes, 100% tax holidays for entities which comes and set up their workings out of total 15 years, 10 consecutive years, there would be no taxation. Yes, zero taxation. Similarly, as goes with all the services including the ancillary service, where I have covered that we as professionals, chartered accountants, can also open our branches and do global service, give global uh, advice, increase our global presence through IFSC. Any income which is generated there for 10 consecutive years, which I may choose at my discretion, would absolutely be tax free. I need not to pay any tax. Definitely, there would be a MAT of 9%, which would be there. And if I opt for the concessional rate, then I would be charged at the concessional rate for the years which are those 5 remaining years which I am talking to. But 10 years, 100% tax free. Moving forward, if we talk about the indirect taxes, then in respect of the GST for the units which are there at IFSCA, it would not be applicable. Again, if the services are being given or taken to any of the offshore units, again, it would not be applicable. So, units doing business inside IFSCA among themselves, no taxes, no indirect taxes like the goods and service tax. If inbound, outbound from IFSCA, again there would be no applicability of GST. If in case any services are given in India from IFSCA, then it would be applicable. It is like similarly, if I am giving services to anybody in India, it would be the GST would be applicable. Similarly, the GST would be applicable. In regards of the transactions, that is the transactions which are done at the capital market, again there would be no commodity or security transaction tag. In fact, to an extent, if any of the property is being registered at IFSC, then there would be no stamp duty. So this is what brings, and this is what is the biggest attraction which is there. Now, there is a discussion which is going with the government that this 10 years may be extended to 25 years. So you may imagine by 2047, when we are seeing we would be a developed nation doing business at IFSCA, there would be no taxation. And being professional, if we are losing or we are not thinking about this opportunity, then there is something which we would be missing. In summary, I may say in 90s, we all of this generation might not be having so much of knowledge how the Singapore, Dubai would be developing. And we have just seen them developing, or we have not made ourselves into that ecosystem so rigorously or so inly that we have missed that buzz. But definitely, this gift IFSC opportunity could be an assessment which can be done by us, and if it looks like we can see for this professional opportunity moving forward. In terms of the funds, if any of the NRIs who are investing, then again in the category 1 and 2 AIF, it's a pass through status, and there would be no PAN card or any ITR filing which would be required to be done. Any of the incomes which are being created by these investors, NRI investors, would be absolutely tax free. There would be no taxability to their income. So $100 they are bringing, they earn 150, $50 it can take away without taking any PAN, without filing their ITRs, and that $50 is absolutely exempted also. Similarly, in category 3 AIF, the taxations are at the fund level. Again, there would be no PAN or ITR which would be required for the filing. Any of these transfers of these securities which are traded at IFSCA, again, they would be exempted. Any of these, if there are Indian securities also, but are having a transaction there at IFSCA only, again, they would be exempted. So, net net, any transaction which are done in the foreign jurisdiction, as it is like exempted, similarly, these exemption would be treated there at IFS. Moving forward, if we see in terms of the incomes, in regards of any of the income which is being earned by means of interest by any of the units lending to any of the units at IFSCA, there would be no taxability. If there is a uh, bond issuance in terms of rupee denomination at IFSCA, then there would be a deduction of 9% of tax. And if any of the units which get transferred at IFSCA, then it would not be treated as a transfer. So any of these securities, the bonds, the GDRs, any rupee denominated Indian company bonds, any of the derivatives, any of the units of AIF, units of any of the business trust, if they change hands at IFSCA, then it would not be treated as transfer. As it is not being treated as transfer, again the taxation would not going to arise from it. So these are the reasons why the IFSCA becomes a very attractive destination for the financial services. That is the reason why there is a big professional opportunities behind it, because when this ecosystem is being developed, there would be required lots of professionals to build this ecosystem, because we chartered accountants are the engineers for the accounting sector, for the financial sector. If we see, and first time when I listened this, I was also shocked that in IFSC jurisdiction, rupee is not a currency which is permitted. That is, rupee is not being identified or not being treated as an specified currency to be dealt at IFSC. There are 15 other currencies in which the business, the work would be done, which does not include rupee. So any transaction which is done at IFSCA would be done in these 15 currency only. So major currencies like the US dollar, the British pound, euro, Sing dollar, Hong Kong dollar, dirham, Russian ruble, these all are being included. Any of the transaction which is done at IFSC would be done in these currencies only. So tomorrow, if any NRI look forward that I don't want to keep my money in the home country, so anybody maybe sitting at US looks forward that okay, I have an account in US, I have a dollar denominated account, but I don't want to keep this money in US jurisdiction. I want to transfer this money to a gift jurisdiction. They can very well keep this money at a banking unit at IFSCA, transfer their money from US and keep it at IFSC. You can say it's a home where they have sent their money, but the jurisdiction would not be of home. The boundaries are of home, but the jurisdictions are not of home. Whatever benefit, the dollar benefit they were earning there, income which need not to be taxed, any and all benefits. To an extent, the banking units give an interest also on the amount which is kept at IFSC. These all could be enjoyed by these NRIs. To an extent, if tomorrow there is any sanction or tomorrow there is any war between any nations, then at least the money which they are having possession of that is there secured in their home country, but the jurisdiction is a foreign jurisdiction. So these are like again some of the very advantageous thing which we as professional can suggest our clients sitting in. Moving forward, if we see the Gujarat government itself have came up with many subsidies, many advantages which can be taken by in terms of the operations or in terms of the capital expenditures which are being done. So any setup which is done in terms of IT or ITS, then they can claim and operational expenditure to an extent of 15% for 5 years, and the upper limit is 20 crores if the fixed capital investment is up to 250 crores, and if it is above 250 crores, then it can be claimed to an extent of 40 crores. So this is in addition to the income tax benefit which the government of Gujarat is giving. Similarly, in terms of the capital expenditure, the capital subsidy, it is to an extent of 25% of the eligible capital expenditure which can be claimed. So the expenditure which is being done up to 250 crores, then a claim to an extent of 50 crores could be taken if the gross capital expenditure is about 250 crores, then a claim to an extent of 200 crores can be taken. So this is what is in addition to the income tax, which any of the entity which is coming, ITS entities which are coming can enjoy the benefit. So how? We have discussed the real estate, the geography where this gift IFSCA is. We have discussed the IFSCA opportunities in terms of what are the activities which are available. So how, if somebody looks forward, then how they what they need to see in terms of kicking starting their activities. Jay Bhai would be telling us in detail how the registration process is gone through. Just to give an overview, we need to first and formally identify the office space. We need to put in our application with the special economic zone. We need to create an entity. And once we receive the LOA, then formally we can kickstart our operations there at IFSCA as a business. So friends, this is what is the ranking. So as I was telling you, majority of the developed nation, or rather I can say all of the developed nation are having their international financial service center. This is a very latest report where if we see the ranking is 43 of gift IFSCA, and what we see is New York, London, Hong Kong on first three. Friends, here where is the opportunity? This 43 will not going to remain at 43. This 43 would be improving day by day, year by year in time to come. And it would not be possible without the support of we professionals, without intervention of we professionals in this ecosystem. And there where the opportunity for us also come where with the increase of the ranking of gift IFSCA in time to come, we can increase our professional ranking, our professional opportunities in time to come. If you see in regards of the latest report, then the ranking has substantially increased. They have seen that the top 15 centers where IFSCA is now being recognized. These are the most latest, or you can say most prominent IFSCA, which in Asia Pacific region is looking forward to getting itself they have gained to an extent in their rating because of the sandbox, the new thoughts, new experimental areas are coming. The startups are working in hand to hand with the IFSC, with the support of IFSC for the innovations they are working with. So, if we see the connectivity, how the connectivity of Gift City have improved tremendously with the other jurisdictions like the Singapore, Abu Dhabi, Zurich, New York, these jurisdictions, the connectivity is now increasing day by day, and it would be improving in time to come. It would be more to be followed in time to come. When now it happens like every second day, there is a new which is happening. Now we are talking about the figures of June, that is 939 registered entities which are there. But now when we are there in October, it have crossed 1,000 of them. So many of these entities on daily basis are coming. If we see in June 30, 2025, there were almost 34 aircraft, 30 ship leasing which lessors which were registered. In terms of the assets which were leased, there were around 253 of them. In terms of the assets under management for the banking assets, they are around 93 billion US dollar assets which are there. Cumulatively, it's around 121 billion dollars. If we talk about in terms of the number of schemes, fund managements which are there are around 272 odd fund which are operating as on June 2025. They have crossed 300 now. So it is increasing very it is increasing in a very fast and a very quick manner. In terms of the intermediaries in insurance, there are around 28 odd of them. In terms of the insurance firm, there are around 19 odd of them. There are two exchanges which have been operating now, that is the BSE and the NSE subsidiaries which are being operating. If we see in terms of the total banking units as on June 30th, 2025, there are around 32 banks, global administrative offices, there are two out of them, payment services, six of the providers, one as the operator. For the finance company, there are more than 34 aircraft leasing entities, more than 30 ship leasing. In terms of the intermediaries, if we see brokers, 87, clearing members 23, AIFs which have been totally registered around 272. In terms of insurance, ancillary service providers 91. So these 91 in totality are some of the CA firms, some of the legal firms, some of the firms which are giving other ancillary services. There are GICs which are there. Four of the foreign universities are have started their operations. So, friends, if I can summarize this opportunity to you all people, then I can just say that these offshore entities which are coming here in India, they have an international curriculum. This is not to be correlated or not to be uh, reconciled with the Indian curriculum. They have an independent education system which they would be having. There are sustainable finance opportunity. India from IFSCA is looking forward that the world biggest sustainable finance exchange is being set up at IFSCA. So these bigs are the opportunities like the ECB's external commercial borrowing. Now, if any of the entity which is there in India, if taking loans from outside India, they need not to take to the themselves to the jurisdiction or to their branch at UK, US. They can very well now raise their borrowings for their foreign jurisdiction or for their home jurisdiction from IFSCA. So I can say this is a box of opportunities, and with the committee, with the many episodes in time to come, we would be understanding and having a deep dive in future episodes of her. For this, thank you very much for giving the opportunity and looking forward for any questions during the session. Thank you very much.
Thank you so much, Amit sir. A real, you know, a very insightful session for all of us. Gives a brief overview and a kind of an opportunity which is existing in so-called foreign jurisdiction, which is still a territorial within the territorial regime of India. Thank you so much for giving us that clarity. We have received couple of questions till now. I would just like to understand whether these we can take at the end of the session, because some part will be covered by our other learned speaker, C.A. Jayashaji, who will be taking the next 45 minutes with us, and let us take last 15 minutes, because what I can understand that few of the queries have already been covered when you have given this presentation. So with this, may I now request
That
our
would be perfect. Yeah.
great. So may I now request our next speaker, C.A. Jayashaji, who is a seasoned chartered accountant and with over 14 years of comprehensive experience in tax and regulatory advisory domain. So he has been instrumental in structuring innovative solutions for clients across diverse sectors, combining deep technical knowledge with practical execution insight. His areas of specialization include mergers and acquisitions, corporate restructuring, gift city and AIF structuring, employee stock exchange, ownership plans, international taxation and FEMA, cross-border investment structures inbound and outbound, with a strong focus on transactional tax, regulatory strategy, and capital structuring. CAGI is recognized for his client-centric approach and his ability to deliver solutions that balance innovation with compliance. So thank you so much for joining us today in this very good, interesting, and important episode, and a very potential area for practice for our members. So I hope we all our members are also enjoying the learning. So over to you, Jessa, for the next arm of this session.
Sure, sure. Thank you so much, Alokji. Thank you, Alokji. Thank you, the committee, for providing this opportunity to take up this session. I'll just share my screen and share the presentation. So, good evening, everyone. As we saw in the first leg of the session, there was a discussion on the overview of IFSC, what Gift City is all about, what all opportunities are available for the chartered accountants. And Amitji took us through the entire overview and introduction of Gift City. Now, moving ahead, taking from there, in this session, we will discuss on the overall process part for setup. So once it is decided to set up presence in Gift City, then what next? What is the process that needs to be followed? What are the compliance requirements? So our focus in this session will be on establishing presence in Gift City, process, compliance, and practical know-how. I've tried to keep this session as much as practical as possible, so as to ensure that we discuss on the practical aspects related to the overall setup and registration process. Before we move to the overall process flow that is involved in setting a presence in IFSC, we will first have a look at what are the regulatory authorities which are involved as far as the entire registration process is concerned in Gift City. So ideally, the approving authority in IFSC is the International Financial Services Centers Authority, the IFSCA. It is the nodal regulator for entities in IFSC. It is a central body which has been formed under an Act of Parliament, IFSCA Act 2019, on lines similar to RBI, SEBI, and IRDAI. So IFSCA is the regulator. It's a unified regulator which governs the functioning of units in IFSC. This authority grants registration to entities in order to enable them to function. If we talk of UAE and just compare it with IFSC, it will give us more clarity that in UAE also there is a financial center. It's an offshore financial center where entities engaged in financial services can operate their business activities. In Dubai, there is a concept of granting license for each activity, each service line. On similar lines, IFSCA also grants license, it grants registration to entities which intend to function in GIFT City. The next authority which is relevant for IFSC is the Office of Administrator IFSCA. It is again a part of IFSCA, but a separate authority which has a different dedicated role, which we'll discuss in the ensuing slides. So, what is the role of Office of Administrator IFSCA? So, while the IFSCA per se grants registration to entities to function in IFSC, the role of Administrator IFSCA is to issue letter of approval. Now, we all know that IFSC is located in GIFT SEZ, which is a special economic zone. Forgetting GIFT SEZ for a moment, any SEZ in India, if any entity wants to set up presence in SEZ, then they need to obtain the approval of Development Commissioner. So there is SEZ Act, and under the SEZ Act, the powers are conferred with the Development Commissioner to grant approval to entities to set up units in SEZ. So in GIFT SEZ also, since it's a special economic zone, till October 2024, all these powers were regulated by the Development Commissioner in GIFT SEZ. However, from October 2024 onwards, these powers have now been delegated to Office of Administrator IFSCA. So all functions, all roles which were undertaken by the Development Commissioner till now, now they all have been delegated to the IFSCA administrator. These two authorities ensure that the overall functioning in IFSC is as per the IFSCA Act and as per the SEZ Act. Now, coming to the next list of authorities, as we discussed, IFSCA is the central body which is looking after the functioning of units in IFSC. So it is the unified regulator. And that is why if any entity wants to set up presence in GIFT City in IFSC, then the other regulators, their permission is ideally not required because IFSC is the central unified regulator. However, in very few select cases, still, there is a role of certain financial regulators where they will be granting NOC before the entity can start functioning in IFSC. So to give an example, if there is any bank which wants to set up a branch in IFSC, then before setting up a branch in IFSC, that bank will have to first obtain NOC from Reserve Bank of India. Reserve Bank of India will give an NOC to the bank to open its branch in IFSC. Once that NOC is received, after that receipt of NOC, the bank will apply to IFSC, and it will also have to submit that NOC to IFSCA. IFSCA will grant its approval only if RBI has given this NOC. Similarly, till recently, SEBI used to provide NOC to a broker if that broker wanted to set up a branch in IFSC. However, few months back, there was an amendment, and now this requirement of granting NOC has been, the requirement of obtaining NOC has been done away with. So any broking entity in India, if it wants to set up a branch in IFSC, then it is now not required to obtain prior NOC from SEBI. However, if any SEBI regulated entity wants to set up branch for doing any other activity, then NOC might still be required. For instance, if there is any PMS entity in India, in mainland India, and that entity wants to say set up a branch in IFSC for undertaking investment advisory services, then there again SEBI NOC would be required for setting up the branch. Similarly, if there is any insurance broker in India, then that broker will have to obtain approval of IRDA if it wants to set up a branch in IFSC for undertaking insurance broking service. At the same time, so all these we spoke about the Indian entities which are registered either with RBI or SEBI or Insurance Regulatory Development Authority IRDA. But if there is any foreign entity, say for example, there is any foreign bank and that foreign bank wants to set up a branch in IFSC, then that foreign bank will have to obtain NOC of its home country regulatory body. So similar to RBI, if there is any central authority in that particular country, then the foreign bank will have to obtain the approval or the NOC of that authority, submit it to IFSC along with its application, and only then the application can be processed subsequently. So this is as far as the regulatory framework is concerned, the authorities involved are concerned. Moving next to the process flow. So this is how the overall process of setting up entity in IFSC will function. So the process starts with name reservation. So say for example, today there is a company in India and it wants to set up a subsidiary in IFSC, or we want to set up an LLP in IFSC. Then the first step is to obtain name reservation letter from ROC. It is pertinent to note that if it is a company which is being set up in IFSC, then that company needs to have the name IFSC in its name. It needs to contain the words IFSC in its name. So say, for example, if it is ABC Private Limited, then it needs to have ABC IFSC Private Limited. If it's a company, it is mandatory to have IFSC in its name. For LLP, still the LLP Act does not mandate, but most of the times it is preferred to have words IFSC so that it gives you an identity and people can relate to the fact that this entity is having a presence in IFSC. So as a first step, just like we have a normal name reservation process, we need to apply to ROC and get the name approval. Here, the only additional step is that along with the options for the name and the object clause that we need to submit on the ROC portal, we also need to submit declarations from the proposed directors or designated partners stating that the activity which this company or LLP proposes to carry out in IFSC will require approval of IFSCA and the entity will obtain the requisite approval. So that is an additional document which goes as far as the filing is concerned. Otherwise, it is on similar lines as a normal company incorporation. Once the name reservation is done from ROC's end, as a next step, the entity needs to identify an office space in IFSC. This is the most crucial and the starting point because any application, any registration in IFSC is linked to the office space in IFSC. It is your approval, your registrations are attached to a particular office space. So once you identify the office space, the developer or the builder of that particular office space, he will issue a provisional letter of allotment. And that provisional letter of allotment will be addressed to the proposed entity in the name which has been reserved by ROC. So suppose the name was granted ABC IFSC Private Limited, the developer will issue a provisional letter of allotment in that name. And in that provisional letter of allotment, the terms of proposed lease will be mentioned, and it will be mentioned that, what is the cooling off period for the lease, what is the lock-in period, what are the terms and conditions of the lease, what is the security deposit to be paid. So that provisional letter of allotment will be granted by the developer. Once that PLOA, provisional letter of allotment, is received, then the normal entity incorporation process has to be started. As a part of the entity incorporation, we'll submit all the relevant forms, MOA on the ROC portal. Once the entity is incorporated, the application needs to be made to the IFSCA and administrator IFSCA. Once that process of application is filed, the administrator IFSCA will issue the letter of approval, which is the LOA, under the SEZ rules. So as we discussed, just like a development commissioner issues LOA for setting up a unit in SEZ, in GIFT SEZ, this LOA will be issued by the IFSCA administrator, and the approval for carrying out activity in IFSCA, the registration certificate will be then issued by IFSCA. This approval is generally divided into two parts. First, an in-principle approval is given, and then there is a final approval which goes to the entity. Once the approvals are received, then the lease deed will be executed. The lease deed is for using the space in IFSC, the office space for which PLOA has been granted, and then the entity can commence its business. It can start its operations as per the registration certificate which has been issued to the entity. So now we will discuss each of these steps in detail, what all activities are involved, what all compliances are involved at each stage in detail. So starting with the office space part, as we discussed, we need to identify an office space first in IFSC because the registered office of the entity needs to be in IFSC. It needs to be in GIFT City. So any entity which is set up in IFSC that cannot have registered office outside Gandhinagar or rather outside IFSC. That office address, the registered office address has to be mandatorily of IFSC only. Now, as far as the office infrastructure is concerned, the options for office space are concerned. The offices are granted here on a lease model. So the way the entire GIFT City has been structured is that the ownership of land vests with the government. The government has granted lease rights to the developers, long-term lease rights. And these developers then grant sublease rights to entities which want to set up unit in IFSC in GIFT City. So the entity which is taking an office space in IFSC, that will not be owning that office space, but that office space will be taken by it on rent, on lease. Now this lease could be either a 5-year lease, it could be a 10-year lease, or it could even be a long-term lease of say 60 years, depending upon the terms and conditions of lease between the developer and the entity. Now, what all options are available for taking office space in IFSC? So when GIFT City started, there were 3 buildings primarily which were constructed. And today, if you see, these 3 buildings are already operational and they are more or less fully occupied. So there are office spaces in these buildings. It is quite rare that you might be able to get an office space in these buildings now because these are more or less occupied. However, it is possible that an existing entity might want to exit or it might want to transfer the office space to someone else. Then you need to follow a proper channel or a process under the SEZ laws, and then you can take that existing office space from some existing entity in IFSC and start using that office space for your new venture. Alternatively, because of the shortage of space, because there were these buildings which were already occupied, what the authority did was that they set up temporary structures. So the developers were allowed to set up temporary structures in form of co-working space in IFSC, wherein there are desks, there are co-working offices available to units to start their office operations. These co-working spaces, generally they are granted on a rental model. So today, typically the trend is that a 4-seater office, a minimum 4-seater office is given on rent. Some developers are also offering 2-seater office, but generally it's a 4-seater office space which is given on rent to the entity. And the charges are generally in the range of 15,000 to 17,000 per seat per month. That is how the rental charges are charged. And as a part of that co-working space, you can then use that space as your office address for IFSC. Parallelly, there are also certain buildings which are under construction. So there are many buildings which are being constructed. 2 of the new buildings have also got constructed and others are in pipeline. So one may also explore taking office space in these new buildings. Next is the entity setup. So before you make an application to IFSCA, you need to have an entity in place. Now, the setup in IFSC could be in two modes. One is in form of a separate entity, which could be a company or an LLP, or instead of having a separate entity, a distinct entity setup in IFSC, you can have a branch in IFSC. So an existing entity can set up a branch in Gift City. Again, here also we can divide it into two parts. The entity or the branch could be set up either by an Indian resident, or it could be a foreign entity setting up a new entity, separate entity, or a branch in IFSC. We will take up each of these one by one because each of these has a separate process involved, separate nuances. First is setting up of separate entity, either a company or LLP by Indian residents. So say for example, there is an Indian entity, say an Indian stockbroker, and he wants to set up a separate stockbroking firm in IFSC as say a company. Then there will be a separate incorporation process which will be done in IFSC. And once the incorporation is done and the approval is received from IFSC, for putting in the funds in that entity, because the Indian entity will now have to put in the funds as share capital in the IFSC entity, the Indian shareholder entity also needs to comply with FEMA overseas investment rules because this will be treated as an ODI, as we discussed in the first session. Any entity which is set up in IFSC that is treated as a non-resident of India for the purpose of FEMA. Since it's a non-resident of India, any investment which is undertaken by an Indian entity in this IFSC entity, that will be treated as if it's an investment by a resident in non-resident entity, and hence FEMA ODI regulations will have to be complied with. So Form FC, which needs to be filed for reporting overseas investment, needs to be complied with, just like any other overseas investment. Say today, if you want to incorporate an entity in Singapore or an entity in Dubai, in similar manner, if you want to incorporate an entity in Gift City in IFSC, then you will have to follow the entire overseas investment process. So if there is an Indian individual who wants to become a shareholder, then he will have to make the investment under the LRS route. Similarly, if the company is a shareholder of that IFSC entity, then there will be an 400% of net worth. That limit will be available for making the overseas investment. So it is at par with any overseas investment which the Indian entity or an Indian resident individual can do outside India. Next is setting up of a branch by an Indian company or LLP. Say, for example, there is a chartered accountancy firm here in India. Say an LLP is there, it's a chartered accountancy firm, and it wants to set up a branch. It does not want to set up a separate entity. It wants to set up a branch for carrying out ancillary services. Then that can also be done. And in that case, the entire ROC process is not required because you are not setting up any separate entity. It's just a simple branch setup. So you really don't need to do any further compliance. All you need to do is you just need to declare that you are setting up a branch in IFSC. And then that branch needs to take an office space in IFSC and do the subsequent steps. If there is any foreign entity which wants to set up an entity in IFSC. Say, for example, there is a Dubai resident, and that Dubai resident wants to open a ship leasing company in IFSC. Then they will have to also follow the ROC incorporation process. The difference as compared to the first point, which we discussed for separate entity, is that here FEMA will not apply because it is formation of a company in IFSC by a Dubai entity. So it is as if a non-resident is forming an entity in a foreign jurisdiction. So since it's a transaction between two non-residents, FEMA will not apply. So the question of overseas investment or FDI will not come into picture. So if we have to compare this scenario with a Dubai resident forming a company in India, say in Gujarat or in Maharashtra or any part of the country, then their FDI rules will come into picture. The non-debt instrument rules of FEMA have to be complied with. You need to comply the FDI process, FCGPR filing needs to be done, valuation needs to be done. However, since IFSC is a foreign jurisdiction, Here, FDI will not be applicable. So the process is simple. Simply incorporate the entity in IFSC and then you can file the application. As against that, if say this Dubai entity wants to set up a branch in IFSC, instead of forming a separate company or LLP, then here also an ROC process needs to be undertaken. So this is on similar lines as a foreign entity forming a branch in India. So whenever a foreign company or a foreign entity wants to set up a branch in India, then under the Companies Act, there is a dedicated chapter on foreign companies in India. So any foreign company setting up a principal place of business in India in form of a branch office or any other setup, if that is constituted as a separate principal place of business in India for that foreign entity, then that entity needs to register itself with ROC as a foreign company. So ROC will issue FCRN, just like ROC issues SIN number to Indian companies. This foreign company's branch in India will be issued a foreign company registration number, FCRN. So FC1 form needs to be filed with ROC. It's similar to an online filing, just like an incorporation process. And as a part of that registration process, the foreign company will be issued a registration certificate and then it can subsequently comply with the entire IFSCA process. Okay. Now moving on to the application filing process. Once the entity is incorporated or branch is set up, next step is to file the application with IFSCA. Now, what is this entire process of filing application? Because just like any application process is undertaken with any other regulatory authority, there is a dedicated process flow for application filing in IFSCA also. Now here the application process is divided into two baskets. One is for activities where application is to be filed on Suite portal, and the other is for activities where application is not to be filed on Suite portal. Now what is Suite portal? We'll come to it in the next slide. But for activities where the application is filed on Suite portal, a single application will be filed on this portal, and then this application, a part of it goes to the IFSCA and a part of that application is submitted to IFSCA administrator. IFSCA administrator will issue letter of approval for SEZ activity based on the application submitted, and IFSCA will issue the certificate of registration based on the application filed. For activities where application is not to be filed on Suite portal, there two separate applications need to be filed. One application needs to go to IFSCA administrator and that application needs to be filed online through the SEZ online portal. The other application needs to go to IFSCA and this application will be submitted through normal email channel, and here there is no portal. So it is a simple email where you have to submit the entire application as per the draft of the application form, which is notified by IFSCA along with all attachments, all related documents which need to be submitted with that application. So this is the Suite portal which we were referring to. So there is single window IT system which has been launched. This was launched last year, where in order to ease the overall application process, IFSCA has introduced this single window clearance system where through a single portal, an application for IFSCA approval and for SEZ approval that will get filed through a single application. So this is the screenshot of the portal which appears on the IFSCA website. So here the entity needs to create its login credentials, and once the login is created, you need to submit the application on the portal. After you log in this, you can submit the application. Now, as Amitji had discussed in the first session, there are various opportunities, various activities which can be undertaken in IFSCA. So out of that, these are the activities as on date for which the application is to be filed through Suite portal. So then if we see this, the left side, because these are the activities where application is to be filed on Suite portal, a single application goes on the Suite portal. which is this portal. And these are those activities. So, say if there is any bank, any insurance company, insurance intermediary, which is an insurance broker, capital market intermediary, which is a broker, stock broker, or a merchant banker, or an investment advisor, or a clearing member, any of such capital market intermediaries which are permitted to set up their shop in IFSC, for them also Suite Portal is enabled. A finance company, just like an NBFC or aircraft leasing company, ship leasing company, all these also have to file application on Suite Portal. Fund management entity, and also now fund. So till recently, only fund management entities application was enabled on Suite Portal. The fund which was launched by the fund management entity, they were required to submit their private placement memorandum (PPM) over email to IFSCA. But now, recently, they have enabled this feature on Suite Portal that the fund needs to file its placement documents on IFSCA portal, which is a Suite Portal. Fintech entity, ancillary services, global in-house center, and vault manager on IIBX. All these activities, you need to file the application through the Suite Portal. For activities like IIBX member or client registration. So IIBX is the India International Bullion Exchange. So there is a bullion exchange in IFSC. And any entity which wants to register itself with IIBX as a qualified jeweler or qualified supplier, they need to make the application through a normal email channel. There, this Suite Portal is not applicable. In fact, there you first need to file the application with IIBX, which is the Boolean exchange. There again, IIBX has its own dedicated portal. You need to file the application to IIBX, and IIBX will then submit the documents to IFSCA and obtain its NOC. Similarly, if there is a payment service provider which wants to set up entity in IFSC, then there also today it is not through Suite Portal, it is through an email application. Bookkeeping, accounting, taxation, and financial crime compliance service, which is BATF application, which is very much relevant for CAs, professionals, company secretaries. For them, again, today Suite Portal is not enabled. BATF service provider needs to submit the application through the online, the email channel only. This is the next application which we were referring to, which is the right side of the slide, which is activities where application is not to be filed on Suite Portal. So there, as we discussed, for activities like IIBX, payment service provider, BATF, there we said that the application goes through email to IFSCA. The second application, which goes to the IFSCA administrator, which is this, where you need to file it on the SEZ online portal. That SEZ online portal looks like this. So it is this portal on which you need to file the application in Form FA. FA has been specifically notified for gift entities, for entities which want to file application in IFSCA. And you need to create your login credentials here for the entity and then file the application on the SEZ online portal in Form FA. This application will go to IFSCA administrator, based on which they will issue the letter of approval. As a part of the application filing process, the entity which is filing the application, the applicant, they also need to pay certain application fees which are prescribed under the respective regulations. So again, here fees will go to two authorities. One is to the Office of Administrator. There is a nominal fee of 5,000 rupees, which needs to be paid to the IFSCA administrator as a part of the application processing fees. And the other fees will go to IFSCA. Now, as far as fees to IFSCA are concerned, these fees vary from activity to activity. So if you are filing application for fund management entity license, then say the application fees is USD 2,000. If you are filing application, say as an investment advisor, then the application fee is $750. If you are filing application as aircraft leasing, then there is a separate fee. So depending on the service activity, there are fees prescribed in the IFSCA fee circular. That circular can be referred to, and based on that, you need to pay the fees. Now, if you are filing the application on the Suite Portal, then the payment of fees can be done directly through the portal, through the online mode. However, if you are making the application through email, then a separate fee payment needs to be done through the online banking or credit card, debit card mode. Very importantly, the fees can be paid to IFSCA only from the bank account of the entity or its KMP. However, because these are application fees, since the entity has been just set up and its bank account would still not be opened, because in IFSCA, the process how it functions is that the bank account will not get functional till you get the final approval from IFSCA. So once your entity is set up, you can of course start the process of opening the bank account, but the bank account will be in freeze mode. So you cannot really make payments from that entity for any fees, or any other payments cannot be made till you receive the license of IFSC. So in that case, IFSC has allowed that the application and the registration fees which are to be paid initially, that can be paid by the parent entity or the promoter. So say for example, if an Indian company is forming an entity in IFSC, the Indian company, the shareholder entity, can make the payment of that fees. And once these fees are paid, you need to make an intimation to IFSC in the prescribed format. So that format needs to be submitted to IFSC along with the application, stating that these are the details of the fees which we have paid. Now, once the application is filed with IFSCA and IFSCA administrator, generally the first one to react, or the first authority which will be responding, is the IFSCA administrator. So generally, once you file the application within a week or 10 days, you will receive an intimation from the IFSCA administrator saying that a unit approval committee meeting has been proposed to be scheduled for considering the application which has been filed for seeking LOA, the letter of approval. So every week there is a unit approval committee meeting, which is the UAC meeting, which gets scheduled in Gandhinagar in IFSCA headquarters. And this is an online meeting, so it does not really matter if you are sitting in Delhi, Bombay, or any part of the country or any part of the world, because we have people applying from across the globe. So today, if any US entity wants to set up an entity in IFSC, then they can attend this particular USC meeting through video conference. And in this USC meeting, they will just discuss the application that has been filed. Generally, they will ask for a basic introduction or an overview of what activity they propose to do in GIFT City. And they'll also check the regulatory framework which allows them to do this activity. They will also normally ensure that parallel to the application which has been filed with IFSCA administrator, a simultaneous application should also have been filed with IFSCA. Now, this issue will normally not arise if the application has been filed through Suite Portal, because Suite Portal is a single application. The application goes to both IFSCA and IFSCA administrator. So there, this aspect will typically be taken care of. However, in case of applications which need to be filed through email, like we discussed for IIBX or for BATF, then there IFSC administrator will also ask if the application has already been filed with IFSCA as well. If the application has not been filed with IFSCA, then generally we have seen that they defer the application for the IFSC administrator also, and they will take it up once the application is filed with IFSCA. So it is suggested that the applications are filed simultaneously with both the authorities. Otherwise, it would just be taken up once both the applications are filed. In this USC meeting, there will be representatives from IFSC administrator. There will be representatives from the SEZ office. There will also be administrators from IFSCA team. So there is a team of officers who will be attending that meeting, and then the application is discussed. And once the meeting is held, within 10 to 15 days, depending on the time taken by the authority, they will then issue the letter of approval. The minutes of the meeting are regularly published on the website, and the letter of approval gets issued on the portal, the SEZ portal, which we just saw. This portal, then you will be having your login credentials, and on this portal, the LOA will get reflected. So this was the process of IFSCA administrator. Now, simultaneously, the application which has been filed with IFSCA, their IFSCA will also take up the application. They will scrutinize the application. They will schedule a meeting or a call with the applicant. They will discuss the application at length. They may ask for additional clarifications, additional documentation. And once they are satisfied with the entire application, they will issue an in principle approval. The in principle approval is generally granted subject to compliance with certain conditions which are to be performed subsequently. So in the in principle approval letter, IFSCA will clearly mention that this is an in principle approval and you will be granted a final approval, a final registration certificate once you comply with ABC conditions. So generally the condition that is prescribed is infusion of net worth. So what happens is that because, as we discussed, your bank account is not functional till the IFSC approval is received. So, IFSC is also aware of this fact. So, what they do is they will give in principle approval. Based on this in principle approval, the bank will make your account functional, and then once the bank account is operational, the shareholder will put in the required net worth in that entity because most of the activities under IFSCA framework, they require infusion of minimum net worth. So say for example, if it's a fund management entity, non-retail, then there is a requirement of 5 lakh USD, which net worth has to be put in the FME entity. Similarly, if it's a distributor who wants to set up entity in IFSCA, then that entity needs to have a minimum net worth of $50,000. So depending on the activity, the service line and the regulatory framework, you need to put in that net worth. It is only after putting in this net worth you will be issued final approval. Simultaneously, you also need to pay registration fees to IFSCA if you want to get the final registration certificate. So the first part was the application fees. Now this is the registration fees. So the registration fees also needs to be paid to IFSCA. Once the registration fees are paid, once the net worth is infused, and if there are any other conditions which have been prescribed, like for example, in case of ancillary services, generally they prescribe certain conditions like you need to enter into a lease deed, you need to open an SNRR, the rupee bank account, and there are so and so conditions which are to be fulfilled. Once all those conditions are fulfilled, you need to inform the IFSCA that okay, we have complied with all these conditions, and based on a review of those conditions complied, then IFSCA will issue a final registration certificate, which will be then the final approval certificate based on which the entity can then start its functions in IFSC. Now, what are the crucial points which need to be considered while filing application with IFSCA? So the application which goes on the Suite portal or on the email, that's a very detailed application. It's a very exhaustive application, and there are numerous aspects which need to be covered in that application. The most important part of that application is the business plan. So the applicant needs to submit the business plan for the entity which it is setting up in IFSC or the branch which it is setting up in IFSC. And as a part of that business plan, you need to inform what activities you are currently carrying out outside IFSC and what activities you intend to carry out in IFSC. What all operations will be carried out, how many employees you will hire, a rough estimate. Uh, what is your office space? What all activities you will actually carry out in IFSC. Like the application contains specific questions on the fact that what activities you will do in IFSC and what activities you will undertake outside IFSC. For example, it is still possible that certain non-core or operational activities like admin functions or HR functions, these might back office operations that may still be carried out outside the IFSC because, say, for example, there is an Indian group. It is already having its, HR operations or legal department in India outside IFSC. Then those activities might still be carried out from India, but the core activities they will have to be compulsorily undertaken from IFSC. The substance needs to be there from IFSC. It cannot be a mere paper office. So you need to ensure that your key business activities are carried out from IFSC office only. Similarly, as a part of that business plan, you need to give details regarding your human resources, who are the employees, the key employees, their profiles need to be mentioned, what roles and responsibilities they'll be carrying out, what are your plans for disaster recovery operations, what are your plans for overall governance mechanism. So there are all those questions which need to be addressed in the application. Similarly, you need to give projections. For certain activities, 5 year projections are mandatory. For others, it is not compulsory, but SEZ department generally asks for that. And even IFSCA team, we have seen they asking for those projections because it gives them a broad sense of what you intend to do in IFSC. It gives them comfort, it gives them an idea of what scale of operations you are planning in IFSCA. And they'll not hold you up, of course, if your actual operations deviate from the projected to an extent, but at the time of filing application, at least that gives them a sense of what is it that you are planning to do in IFSC. Second most aspect, as far as the application filing is concerned, is appointment of KMP, including the principal officer and compliance officer. So most of the service activities which you need to do in IFSC, the regulations require you to appoint a PO and a CO, a principal officer and a compliance officer, who need to be functioning out of the gift city office. They need to be sitting in the IFSC office and they need to perform the operations from the IFSC office. So these principal officer and compliance officer, there are certain educational qualifications prescribed for them. There are certain experience criteria prescribed for them. For example, if you talk of fund management entity, then a PO needs to have at least an educational qualification in form of a professional degree like a CA, CS, or an MBA finance, or they need to have say a postgraduate diploma in management. That is prescribed. Similarly, as far as the experience criteria is concerned, they need to have at least 5 years experience in fund management or related capital market field. So all those criteria need to be ensured that you are fulfilling them, because you need to give these profiles, you need to give these names of the proposed PO and CO to IFSC at the time of filing application. The biodata, the CV needs to be submitted. The educational qualification certificates need to be submitted. Many divisions like capital market intermediaries team, they even ask for the experience letters. So all these documentation should be available with you at the time of filing the application. Similarly, once the in principle approval is received, we saw that the net worth needs to be infused. Now, here, very important point is that at the time of filing the application, since the entity would be a new entity, it would definitely not have any net worth or track record. So for that, IFSC will generally ask for the net worth certificates of the shareholders of the IFSC entity. So if they are individual shareholders, they'll ask for the net worth certificate, which should generally not be older than 6 months, and their ITRs for last 3 years. If it's a body corporate, which is a shareholder, then they'll ask for the audited financial statements for last 3 years. Based on which they'll test that, okay, the shareholders have adequate net worth, and they'll be in a position to put in the net worth in the IFSC entity as per the requirements. In some areas like investment banker or broker dealer, the net worth needs to be mandatorily in form of liquid assets only, while in other cases the net worth can be paid up share capital plus reserves. But for some service activities, they will check your liquid net assets. So that is something which you need to ensure. UBO details will also be tested. So if it's a complex structure, or if there are layered structures are involved, then you need to ensure that you are giving the structure till the end shareholder. The UBO details are furnished. The UBO needs, or the shareholder entities, they need to be from FATF compliant jurisdictions. KYC documents will have to be furnished for shareholders and KMP. Certain sector specific aspects would have to be ensured. Like we discussed, for Boolean trading, the application will go to IIBX, and then IIBX will submit it to IFSCA. Similarly, in case of payment service provider, there is an option that instead of first forming an entity and then filing an application, you can simply, the shareholder entity can only file the application with IFSCA. And once you receive the in principle approval, after that you form the entity and then obtain final approval. You also need to register your DSC on the portal, because since it's an online application on the Suite portal, the application will be submitted through DSC. So all these are certain practical aspects which you need to comply with when you are filing the application. Once your approval has been received from IFSCA, The last leg is before you can go live, before you can commence your activities, there are host of activities, host of compliances which you need to adhere to, especially from SEZ perspective, because you are a unit in GIFT SEZ. You will also need to comply with the SEZ rules. So you need to comply with these activities. Like you will have to accept the LOA which has been issued by the IFSC administrator. You need to file bond come legal undertaking with SEZ authority, which is an undertaking saying that as an SEZ unit, if you will avail any benefit in GST or custom duty, because it's a duty free zone, then you will comply with the regulations. Else you will be liable to, pay that much duty to the authority. So for that, you will have to execute a bond. You need to also apply for an eligibility certificate, which is issued by the IFSCA administrator. That eligibility certificate generally says that, okay, this IFSC unit is eligible for exemption from GST, exemption from stamp duty. IEC, GST needs to be applied for, RCMC needs to be taken. You also need to register on SEZ portal. Registration of portal is mandatory, which is the Financial Intelligence Unit. Because you are a regulated entity, you need to register on FIU portal. Identity cards, the ID cards of employees need to be obtained from the SEZ office. And you need to intimate the commencement of operations to SEZ authorities in a prescribed form. You also need to submit the lease deed details to SEZ authorities. And as we discussed earlier, FEMA compliances need to be adhered to for the overseas investment. So once you have done all these compliances, then you are ready to start your operations. These are all pre-commencement compliances, and then you can commence your operations. Yeah. I guess this is it. This is as far as the overall framework for setting a presence and compliance is concerned. I'll just stop here, and yeah, if we have any questions, we can take it up. Thank you so much.
Thank you so much, Jai sir. And now I think so we can take a couple of questions which we have received from the audience so far. So let me just open that window. Okay. So the first question is that it needs an advice regarding senior practitioners without peer review certificate practicing as a proprietor firm. So I don't know, the question is not structured so well. So if this has anything to do with the gift framework, sir, Amit sir.
I think we need to have some bit more clarity on the question. Then
Yeah.
I think if
Yes, yes.
Jay
Even
can
I'm
please.
not able to make out much of sense out of it. So coming to
Uh,
next query, what we have received is whether a company having a registered office at Mumbai and 100% subsidiary at Gift City can go for IPO with BSE SME exchange.
So first and foremost, like there is a myth that if I am coming and raising funds from the IFSC jurisdiction, I need to be registered there as an entity. So prima facie, just to take a clue from your question, wanted to explain this. This we would be discussing more in the capital market series of ours. But to be very clear, an entity coming and raising funds from jurisdiction of gift, maybe equity or bonds, is not required to get themselves registered. Now,
Okay.
in case any of the entity is registered already having an 100% subsidiary at gift, then it again goes for a measurement of an structuring. But it looks like if it is having an 100% subsidiary at gift, it is having foreign operations. Now, if the foreign operations are there, then gift could not be the better jurisdiction from where itself they can come up with their IPO at gift exchanges. There is a separate independent ecosystem of capital market intermediaries there at gift. They can utilize that ecosystem and can raise capital from world across. Here the restriction would be for this entity, they won't be able to take money from Indian investors. So I think that might give a clear answer to the question.
Thank you, sir. Coming on
If
to
Jay want to add anything, please feel free.
Sure, I think this is good enough. Yeah.
Yeah, thank you.
well, thank you. Coming to next question, what we have received is the unit can service only foreign clients and can do audits or only accounting and tax work and any entries or only IAE. So,
So my simple answer is yes. Uh, Jay, if you can,
Sure.
I think you have a good command on this. If you can, yeah, please.
No, sure. So yes, the entity which is set up in IFSC for BATF, which is bookkeeping, accounting, taxation services, or for providing prescribed professional services, they can cater to either non-resident clients or to entities in GIFT City itself. So because GIFT is also regarded as a jurisdiction outside India, so you can cater to these clients. However, you cannot cater to domestic clients. So that entity will not be able to provide services to an Indian entity. But yes, otherwise you need to exclusively provide service to foreign entities or gift entities.
And just to add on, your services are not limited to audit or taxation. Like it's like the world is open to you. So any advisory, bookkeeping, taxation, any sort of advisory which you as a professional can provide in India or in being in India to the world exclusively for world, you being there can provide those all activities and services.
thank you, sir. Coming on to next query, we are left 5 minutes now, so I'm just quickly taking it up. I'm a qualified CA and a CFP and CWM, which is Chartered Wealth Management. I want to provide financial planning and investment management services in India and through GIFT City. What advice would you like to give to me?
So basically, there are two activities what our fellow friend want to do, and for these two activities, he wants to go to two different regulators. So anything done in India, he needs to go to SEBI, get himself registered. Anything for gift or for world, he can go and register himself at IFSC.
Okay. So next question is, can a real estate developer set up a business operation in GIFT City?
Jay, want to take?
Yeah, so because IFSC, as Amit ji had, I think, explained in the first session, that it is dedicated to financial services. So developer will not be able to set up entity in GIFT City. Of course, they can work in IFSC, GIFT City in form of the projects which are coming up or take up activities of co-working space and all, but their income will not be eligible for the 100% tax exemption that we just saw because it is not an eligible financial service under the IFSC framework.
Thank you, Jay, sir. Moving on to next query. Few months back, official gazette was issued in regard to IFSC or related to GIFT City. What was that purpose and how it is helpful if work given to IFSC?
So basically, in a very simple uh, words, if I can put it, it would be called a mirror image. Mirror image of the firm. So if today I am having an entity, a firm in India, and wants to take a COP or want to cater any entity outside a CA entity outside country, I, as a chartered accountant, was not eligible for this till the time it got passed in Pahalgaon council meeting I think on 13th or 14th of April. I'm like missing the date, but the council meeting was at Pahalgam. So now, as a chartered accountant having a COP, I can have a COP in India. I can even have a COP at GIFT or any other jurisdiction in the world. So now I can keep two COPs. And if we see two things, one, COP, two COPs was not allowed, that is now allowed. In case I am having or I am a partner in another firm, then while calculating the points of CAG, those points was not taken into consideration. So those deductions would not be done now in case I am having two COPs in this format. So now I can be a partner in India and a partner in GIFT IFSC.
Great. So that's a very good development. And coming to next query, since the time is very limited with us, what is the process of setting up business in IFSC? Business is a tech consulting firm doing business with a fintech company located in USA.
Yeah. So as far as tech consulting is concerned, we'll have to first evaluate if it fits within the framework of fintech entities or the newly introduced TechFin framework. There, the essential test is that you are providing services in the area of financial technology, or you are developing a tool in that area, but your service recipient should be in BFSI segment, either directly or through an intermediary. And if you are qualifying as a fintech entity or a techfin entity, then yes, the application process is then as per the process that we discussed, the entire steps which we need to follow, right from name reservation till receiving approval from the IFSCA. But the first test, the crucial test, is to evaluate the eligibility under the applicable regulatory framework.
Okay. So coming to next query, I think so this will going to be our last query which we can take up. We have certain more questions which we have received in the meanwhile, and we will send to both of you. And maybe this solution to the same, we will write to all our valued participants so that they should be able to have the clear-cut understanding. So last question which we want to take up is whether an Indian manufacturing company can set up its global treasury center and issue bonds to overseas investors which are listed on Gift City Stock Exchange. And is there will be withholding by Indian company to overseas investors?
So would you like to take, Jay, or I take?
Sure. So the Indian entities, they can issue the bonds. For that, of course, you don't need to open a global in-house center, but you can issue bonds and list them on the IFSC exchange. These bonds can be issued to the non-resident investors. There, the withholding tax rate on that interest is reduced to 9% under Section 194 LC. But Amish, if you would like to add anything here.
So I can just give a very simple example towards it. Now all the PSUs are looking forward to open their global treasury center at IFSCA. Many of the entities like the Tatas and the Fortunes of India who have global operations are doing an assessment of opening their treasury center at IFSC. Again, the point I had mentioned at the time of presentation, there is certainly a risk of keeping my money in a land which is not in my control. Definitely, the jurisdiction would not matter. The cost of human resource which is there at IFSCA and at any part of the world, the cost of real estate, which is if I'm having an office at GIFT and if I'm having an office at London or US, it is far more cost effective. So, taking these points into consideration, not even Indian entities are looking forward for creating their treasury centers at GIFT, but some of the foreign jurisdiction entities are now looking that they may give as their treasury center. So definitely the low cost of manpower, the low capital of investment in the real estate makes it a very attractive destination.
So, uh, since we now come to the conclusion of this very insightful session, what I can say that Gift City is not just a destination. It is an opportunity, it is a vision and a gateway for global practice. So thank you so much to both our learned speakers for their lucid, enriching, and highly practical insights.
Thank
A
you.
special word of appreciation goes to all our participants who joined us virtually this evening. Your active engagement, questions, enthusiasm reinforce the collective spirit of continuous learning that defines the CA fraternity. Please don't forget to give your valuable feedback to us. It matters a lot to us. And I would also like to acknowledge the chairman, the vice chairman, and members of the Committee for Members in Practice, our ICI leadership, under whom we all are looking forward to enable the vision, our president, our vice president, for conceptualizing all these knowledge driven initiatives and the ICI ecosystem in totality, which can empower practitioners to scale, to diversify, and lead with confidence. So, with these words, we would like to end this episode, and other episodes will on those particular opportunity areas that we have well covered by our learned speakers. So we will come out with all those continuing episodes. So please do watch us, and in case if you are receiving the emails, please don't unsubscribe the emails which are coming from the ICI, as lot of insightful programs various other committees are also organizing, which can lead to a real capacity building of our practicing members. So stay healthy, stay tuned. Thank you for joining with us today.
Thank you.